Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equities are set to open little change. Tracking regional pairs, talk about the gift Nifty indicates a negative start for Indian equities. The losses in consumer goods, technology and oil and gas sector combined dragged US shares lower. However, it was Fed minutes which showed likelihood of further rate hikes essentially, which weighed on the risk appetite of the investors across the globe. Let's talk about Asian Pacific markets. Saw a sell-off on Wednesday, Thursday, on mirroring the move on Wall Street after a decline in the US banks. Talk about FIIs, they've bought shares worth around 722 odd crore, and DIIs, which have purchased shares to an extent of around 2,406 odd crore. Let's talk about the FII Qs and FNO. Overall, they've just been net buyers in index futures and bank Nifty options. For index futures, they've bought shares to, they've been the buyers in the index futures to an extent of around 221 odd crore. Sellers to an extent of 5,214 crore in the index option. Also have been sellers for stock futures along with bank Nifty futures to an extent of around 284 crore. They've been buyers, as I indicated earlier, in the bank Nifty options to an tune of around 401 odd crore. The stocks that still remain in the FNO ban, Chambal Fertilizers, Delta Corp, Balrampur Chini, India Bull Housing Finance, along with Zeeg Renews, Manappuram Finance and India Cements and GNFC. The list is pretty long out there. New in the ban, Hindustan Copper and SAIL. These are the ones that need to be watched out for. But let's discuss some stocks and strategies with Chandan Taparia, Senior Vice President, Heads Derivative and Technical Research at Motilal Oswal. Good morning, Chandan.
Good morning. Thanks for having me.
Pleasure is all ours. Talk us about the trade setup. You think recovery again come to the fore in the second half of the trading session, as the trend has been witnessed in the last two trading sessions. What is the strategy for Nifty and Bank Nifty along with the levels, please?
Yeah, so we have seen some profit booking in the market in the last 3 weeks, but the good part is that key support level are working well. Just a couple of days back, the index has broken the support of 19,560 as it fell to surpass psychological 20k marks, and after that it drifted to 19,250. And 19,250 is exact the 50-day exponential moving average. So on last trading session on Friday, it witnessed the recovery from the same level. Even yesterday also it witnessed the decline, and the decline was bought with support of 19,300. So multiple supports are there. Due to the weakness in the global market, we are witnessing some profit booking. But with multiple support at heavyweights, we are witnessing some recovery. So if Nifty per se, we believe because of such kind of movement, is likely to be in a broader range. As of now, the trading range for the Nifty will be 19,250 to 19,560. 560 could act as a major hurdle, but 250 could provide as a multiple support zone. So any decline towards 19,400, 350 could be utilized for buying opportunity with support of 19,250, and we can see some bounce towards 19,560. So we have to play the range between 19,250 to 19,560 for day or for next couple of days in the market.
All right. Also, let's talk about the recommendations that you have for us. Any view coming in for Adani group of companies out there? GQG again has come to rescue. It's bought in more equity coming in for Adani Power. Earlier in the week, it was Adani Ports. Your recommendations?
Yeah, so I don't want to comment more about the group companies because volatility is clearly visible and trend setup is messy, and certain key trigger could provide the momentum. So a couple of days back, it was showing some strength, but again, it got stuck in a range. So I think need a decisive range breakout, then only the recommendation can be generated here. But apart from that, I think one need to focus on auto and salaries name. In FNO space, in auto stocks, we are positive on the Tata Motors. The stock has recently completed a correction from 650 to 600 zone, taking support at 50-day exponential moving average. So it can bounce to us 650 kind of level. We like a stock like M&M, which is holding well. Key supports are being respected. Breakout could be there. If you're looking at non-FNO name, then I think the stocks like Olectra, JBM Auto in auto and salaries EV name could be in focus. We are also positive on the counter like Mazdok, Cochin CPR, GRSC. So specific, if I talk about Mazdok, the stock has completed its correction of last couple of days, formed a bullish candle. So with support near to 1888, it can rally to us 2050 kind of level. So these are the couple of names which could be in focus in the market.
All right, Chandan, that was a precise and time takeaway with recommendation, but we're going to be addressing in the markets open just in a bit. Well, we are looking at losses coming in for Nifty 50. As anticipated, risk aversion is probably playing out. Indian equity markets are perhaps feeling the heat as well as compared to what we've seen in the regional counterparts. Nifty 50, 19,500 mark, below that level. In fact, 19,450 below that psychological level too. Bank Nifty, let's talk about that. Whether a bit of underperformance is also coming in from Bank Nifty. Well, it's a flat start with negative bias for Bank Nifty. Talk about small cap and the mid cap index. Well, a bit of outperformance coming in from the broader counterparts. We're seeing gains to an extent of 0.25% for mid cap and more than 0.3% coming in for small cap index. Let's talk about the sectoral indices to see the trend playing out. IT index, well, losses to an extent of 0.1% or thereabouts, minuscule at this point of time in opening deals. Let's talk about the other sectoral indices that we have. Realty, metal index, auto perhaps. Well, some amount of traction coming in for the auto basket, and also what will be in focus will be the real stocks. Metal companies are doing well. We're seeing the entire basket with gains to an extent of 0.1% or thereabouts. Let's talk about the other sectoral indices that we have in the chart right now. Well, we have pharma, which is holding up to an extent of 0.2% out there. Realty index, also is something that needs to be seen. Along with that, we are also witnessing some amount of profit booking probably, playing out for FMCG names, something like 0.25% taken down on FMCG Realty Index. The basket is flat with positive bias. And let's talk about the other, sectoral indices. Infra at this point of time is also, witnessing some amount of caution out there in early deals. A flat start with negative bias. Overall market breadth, if you look at that, advances 22 to an extent of declines, which are 27. Let's look at the top gainers and the top losers that we have overall on the list, just to see where the trend has been stacking up. We have Asian Paints, NTPC, and Adani Ports, essentially, which are doing well in trade. Titan, DRL, and SBI. These are some of the other gainers that we have, along with Adani Enterprises, M&M, and Sun Pharma. These are some of the top gainers that we have. Let's talk about the top losers. Cipla, ITC, Grasim are some of the top losers that we have overall on the list, along with ONGC, Eicher Motors, and JSW Steel. These are some of the top losers that we have on the list right now. We are going to get back to Chandan in just a bit. Let's address the stocks that need to be or are on your watch list right now. Cipla, where Patal Ganga plant unit license will be suspended for nearly 10 days by the state FDA. The reason for suspension is the non-conformance of the good manufacturing practice within the unit. The company is in the process of appealing the order. Order was dated August 10th, and the company says it doesn't see any kind of material impact coming on the financials of the company, but stock right now is down and out with losses of more than 1% out there. A couple of block deals that I'd like to address. Religare to begin with. Berman family has bought in 5% stake in the counter. Along with that, now the Berman family overall holds around 14% stake in the company. Right now, the stock is trading pretty much flat. MB Finmart has bought in 81 lakhs shares, along with VIC Enterprises, which has also bought in some amount of equity within the counter. Of course, the seller has been Investment Opportunity 5th PTE, which is sold in. Let's address another block deal, an interesting one out there, JSW Energy. That's another one for you, where the promoter investment sells. They've sold into an extent of 1.3% equity within the counter. You can see a downtick coming in on the index, 2.5% wiped out in early deals. The shares were sold at an average price of 341 per share, which is a discount as compared to 360, which is the current traded market price on the counter. GQG has bought in 1% equity out there, and they've purchased shares to an extent at an average price of 341 rupees per share. You can see the significant discount at which the deal is perhaps taking place. Of course, a marquee name is entering, but also don't forget the fact that it's promoter which is selling off. Adani Power, Well, the same story plays out there, but just that the appetite and the percent is way more higher. Promoter has sold in 8.1% equity at a price of around 279 per share. Look at the stock and the uptick. 2.5% uptick coming in for Adani Power. In fact, I'd not be surprised for the entire group companies doing well in trade today. Promoter has been selling off. They've sold, but on the buying side, you have something like a GQG along with Goldman Sachs, which have actually purchased and bought in the counter, and this reinforces their faith amidst all the flurry of the negative news that we're seeing around this counter. Despite that, you're seeing GQG going out and shopping particular equities for Adani Group of companies. GQG had previously picked up around 5.5% in Adani Enterprises, a 6.5% in Adani Green Energy, and 2.5% in Adani Transmission. So overall, the bullish faith, let's just say the optimism of the group within the group of companies continues out there. Let's talk about Paytm. Another one that you need to keep on your list out there. Antfin has transferred in 10.3% stake to the chief, Vijay Shekhar Sharma. Now, it's a bit of flat trend playing out for Paytm. The stock is it's not gone anywhere, perhaps trading in a very range-bound, stuck in that range. The Antfin transaction has taken place at a price of around 795 per share, and this marks around 1/3 of Paytm's IPO listing price of 2,000 rupees, 2,150 rupees a piece. So that's that when it comes to stocks and news. But I'm going to go back to Chandan and check with him what does he make out of railway stocks, which are also buzzing in trade today on a couple of developments which have taken essentially, the cabinet, the CCEA has decided to approve in 7 multi-tracking projects of Indian Railways at a price of around 32,500 crore. Let's just say a cost of around 32,500 crore. Chandan, weigh in on this one?
Yeah, so railway stocks should be in focus, but one should also keep the name like shipping, whether you talk about Cochin Shipyard, GRSC, Mazdok. We discuss about the same, and these stocks are really doing well. And now if I talk about railway counter, most of the railway stocks are on momentum. If I talk about counter like Ircon, the consolidation of 5 days gets over. 101 is support, stock and rally to us 111. Texmaco Rail is other name. I think the momentum could continue overall. It is making high top, high bottom on the weekly chart. 117 is a support, stock and rally to us 130. IRFC is one more counter where we see the positive price pattern. So let it find support near to 47, then it can head towards 53 level. So I think these are the couple of names in the railway which could be on radar, and some sort of momentum could be seen here.
All right, Chandan, we're just going to leave it at that. Thank you so much for taking out the time and speaking to us this morning. All right, let's time to join in for the second guest out there. Fundamental story needs to be addressed, perhaps a little different perspective out there. Joining us to take the discussion forward is Feroze Azeez, Deputy CEO, Anand Rathi Private Wealth. Good morning there. Thank you for taking out the time and speaking to us this morning.
Good morning.
All right, I'm just going to start off by asking your assessment. Overall, there are a number of block deals which typically have taken place, and in most of the block deals, you're seeing promoters which are offloading equities. It looks like more of the retail category is perhaps at this point of time buyers in the market. FII trend too has started ebbing off. What do you make out of the current situation? Where do you think the markets are headed at this point of time?
Nickey, see, block deals are a part and parcel of this business. Of course, The frequency at which you hear of them could increase, like you rightly pointed out. But I think each business is very different when it comes to block deals. So they have a very little semblance to what the market has for us, because the sizes are different, the natures of the business are different. Like Religare, you were mentioning, the 14% stake of Burman family is a very, very different each story, and that has to be analyzed piecemeal. So that's point one. Point two, I personally think the second point which you made, retails are buyers. Retails generally are buyers through the domestic institutional investors. And if that's the hypothesis, then you're absolutely right, because close to 7,000 odd crores has been pumped in by domestic institutions into cash market alone over the last 15, 17 days of August. That's a large number. On the other hand, FIIs, again, like you rightly pointed out, have not been buyers or sellers. They're just about 500 crore negative for this full year. Having said which, my hypothesis over the last few years, which I've tested, is that if domestic institutions buy, mid caps and small caps run up. If foreign institutional investors buy, the large caps run up. So you see this divergence in this financial year between small caps and large caps, which proves the hypothesis that domestic institutional investors are pumping in money, and those are the lead indicators to small caps performance. So that's where I'll stop for your next question, Nickey.
Sure. Speaking of a little more theme out there, perhaps we could address in railways. Do you think there is more steam left for the entire sector? At least the government seems to be ensuring that, given that yesterday there was a slew of approvals which have come in with 7 multi-tracking projects to an extent of around 32,500 odd crore. How do you see that segment? And within the segment, are there any stocks that you would recommend at this point of time?
See, Nickey, I think when you look at themes, it's very important to analyze the kind of valuations which those themes command. So I personally think a lot of growth has already been done by financial services. For example, in Nifty, 36% of the weight comes from financial services. That's a large weight. About 10 years back, that weight was 29%. And that has contributed about 4.5% on Nifty movement this financial year. Coming back to the point of railways, I think the valuation there is reasonably attractive. And the defensive nature at these levels of the market, when the markets are a little indecisive for the full 1 month, July 20th last month, Nifty touched about 19,979, and from there on it's tested the lower levels, and buying is also there at the lower levels. So coming back to your point, I would say railways definitely I would, as a theme, play out as a fund manager, but not as a retail investor. I think it's very important to know when to get out. So I would rather look at funds which have a larger exposure to this specific sector because of the valuation being very, very reasonable. And I think there's a lot of headroom over the next few years for value to play out.
Sure. Let's also talk about the entire financial space. The outlook on banks essentially may have turned a little cautious of late, but there seems to be enough takers for the NBFC story overall. At NBFC, perhaps at this point of time, are outpacing banks in terms of the disbursement growth. What do you make out of it? Do you also hold the same assessment?
See, I think if you have to assess the financial services, inflation becomes a very, very important variable, which is a lead indicator to interest rates. If you look at the spike in inflation over the last number, which has come above 7%, which is a surprise number. Largely, if you break down that inflation into smaller constituents, you will realize that vegetable inflation has contributed significantly to this spike. And I personally feel that it's transitory in nature. If not, if I'm wrong, then there could be a rate hike from an interest rate standpoint. So I think that will bring down the credit offtake, which NBFCs are running on the back of. So the peaking out the inflation, interest rates is the story. Which will decide which directions these NBFC counters would go. But the credit offtake will definitely reduce if we are not already at the peak of the interest rate cycle.
All right. So are you also a firm believer of NBFC over banks? How would you look at it?
See, what happens is banks have a reasonable, simpler business model to analyze, but NBFCs have very, very different strategies. Like an NBFC, a systematically important NBFC as per RBI, will have a large, diverse business nature. So I personally think each NBFC has a very different NIM aspiration and a business strategy and the delinquency rates. So, but having said which, I would say that there's more headroom for somebody to analyze and cherry pick in the NBFC space than in the bank space currently.
Also, I'd like to chat about GQG, and the Adani group of company stocks. They've, of course, been in traction for the entire week. A flurry of news flow out there. Some of them, of course, is negative. And today, we've seen some amount of finally optimism coming in with another vote of confidence for the group from the GQG partners. What do you make out of it?
See, Nickey, I would not want to specifically comment on the group and its strategy, but I personally think that, like you said, finally there is some degree of optimism. Having said which, of course, the news flow is going to be very large. If you look at one variable which we very consciously track is the ratio of the volume to the market cap, which is a great lead indicator whether this move has to be taken seriously or not. If there's a market cap of 100 rupees, for example, for a company, and the volume has been very, very small, then I would not take the up move or the down move as seriously, because that's not a large expression of majority shareholders or prospective shareholders.
Right. Overall, are you like a bull on the Indian equity markets right now? Of course, we've been playing out the entire narrative of a structural bull run in place, and perhaps sessions of correction out there, which perhaps serve as a buy on dips kind of opportunity for long-term investors. But do you think the near-term trend at this point of time, given the news flow across the globe and the fears around the rate hikes, would probably weigh in more than anticipated? Your assessment?
Like you see, I'll have to fundamentally express my thought process in this. See, English words hide more than they show, like a bull run, a bear run. A bull run 10 years back had a different definition than it is today, but it's still called a bull run. So since India has lost the base effect, 15 years back, the base effect was in our favor. We were a small economy. We were a small capital market. Today, we are a very large capital market with the largest number of listed stocks, about 4,200 odd in BSE and about 2,000 odd in NSE. So coming to the point, yes, I personally think there is a structural bull run possible. Having said which, the disclaimer is the definition of a bull run means, in the current context, median plus returns of 3 to 4%. A median Nifty return, median is a statistical measure of center of a data point, which is 11 is the median return of Nifty. The mean return of Nifty is 14. I would say that a bull run can be classified as a bull run in the current context with the size of the economy and the capital markets which sit in, is 3 to 5% more than the median is certainly possible over the next 5 years. One more disclaimer, as I like to give, is that equity as a nature of this beast is that it will show you 15% corrections from peak to trough every single financial year. And that's what it has done for the last 23 years. If you're not prepared to see that peak to trough, then I think you will not be able to benefit from the bull run, as I defined as 4 to 5% more than the median return of 50.
What are you currently bullish on within the space, which you think still is a value buy after the recent round of perhaps a bit of profit booking that we've witnessed?
So I would certainly say consumer cyclicals have a large role to play. Of course, their weight is not as much. Their weight is about 7% in Nifty. But I think energy and consumer cyclicals will definitely be one of the themes which I generally very microscopically look at when we pick funds for that matter.
All right. And within the IPO space, are you liking anything? Something like a Pyramid Technoplast, perhaps a little small IPO out there to an extent of 150, but Aeroflex is the one where Kacholia is holding in perhaps 2.5% kind of an equity. What do you make out of it? Are you looking at these two?
Nickey, I would not be qualified to comment because I personally think a business goes through a transition, and I generally don't like IPOs because there's no data to analyze from a demand-supply standpoint, and listing gates don't attract me as an investor.
All right, then we're just going to leave it at that. Thank you so much for taking out the time and speaking to us.
Thank you, Nickey.
All right, with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.